Hello and welcome to episode number 10 of Policy in Wonderland. I'm your host, Editor Amira. You can call me Abby. In Policy in Wonderland, just like Alice, we are going to explore and see the wonderful world of insurance, Insurtech, and everything that's connected to this amazing ecosystem. In Policy in Wonderland, you will meet startups from all over the world, key figures, VCs, brokers, and more. So without further ado, we travel today to San Francisco, and I want to invite my guest to join me as we go down the rabbit hole. Please welcome Amir Kabir from AV8 Ventures. Hello, Amir.
Hey there, thanks for having me.
Great to
Glad to
see
be
you
here.
here. Thank you very much
Thank you.
for joining us. And
Sure,
Amir, let's jump in a brief introduction about yourself, and let's dig InsurTech, in InsurTech.
sure. I have been investing in and around insurance for the past, I would say, 10 years. My journey to insurance was to like different steps, but I have no insurance background, which I think is good, maybe also bad. I think it's good. For most of my life, I grew up in Germany and spent most of my professional career on the operating side, either with an enterprise software startup that I was part of, where we built enterprise communication management software, or on the consumer side, where I started a consumer business with a friend of
Mm.
mine, which was basically not so successful, but I think a lot of learnings. And then I made my way to the US almost like 11 years ago, where I was on the East Coast and, started working in the venture field with, a small fund called Route 66 Ventures, which, back in the days, what I think was really ahead of the game when it comes down to fintech and insurance, because 11 years ago, they were already looking into Insurtech, right? And that's where I made kind of my first investment in Insurtech. I was part of the team over there. And that's how I got into like the insurance world and, saw like, hey, it's kind of interesting and exciting and kind of stick with it. And then made my way to, the West Coast here in San Francisco. I've been here for the past 8.5 years. And during my time here, I helped build up Munich Re Ventures, which a lot of people are probably familiar with, which is the
Really?
venture arm of Munich Re.
Wow.
So I was part of the founding team there, and I spent time there for almost 6 years. We went like from, the first fund and three people uh, to, like when I left, I think it was over 20 people on the team, $1 billion under management, I don't know, 40 investments, a couple of exits. And we're basically part of like the whole kind of insurtech wave that started in the early 2010, 12 era. And then I left and wanted to go back to, my early stage roots, sorry, and joined AV8 Ventures as a partner, where I lead the fintech and insurtech practice. We are an early stage fund on our second fund of 180 and similar size
Mhm.
first fund. We're a generalist fund, but I'd say, we have three areas of interest. One is enterprise, one is healthcare services, and a third one is the fintech and insurtech area, which
Mhm.
I lead. And we mostly look at, early stage startups from pre-seed to seed to kind of Series A level. But I would say pre-seed and seed is mostly the focus. And to date, I've done 7 investments with AV8. I'm actually closing on my 8th investment now. All investments
Nice.
are, early stage, very hands-on with the founders. I take board seats very early on and try to really be in the trenches with the founders and help them navigate their business, give them kind of my insights, my knowledge that I kind of accumulated over the last about 10 years, and help them get from one level to the other.
And you accumulated a nice knowledge about insurances, I can say, because you wrote 2 articles, and I think it's, I don't know if the most popular, but one of the most popular articles about insurtech and insurance, because you wrote on 2022 about the Insurtech Wave 1.0, right? About the Insurtech, about the Insurtech Wave. This is article number 1, and article number 3 is on 2023. And there you analyze the history of insurance, especially in the US and the mainstream US, beginning from State Farm, Geico, and till the days we are right now. And can you give us a brief or walk us through the evolution of the insurance industry?
Sure.
And,
yeah, I mean,
and
thank you, appreciate it.
highlighting the key changes that brought us Insurtech. Because if I was born like in 1901, and then State Farm founded on 1922, I think, and I will maybe think this kind of Insurtech in a way. So yeah, go ahead. Sorry to cut you.
No, first of all, thank you. I don't know if that these are the most popular articles. I hope they are. I really put a lot of effort in, and so I appreciate if the community likes it. And on that note, actually, part number 3 is
here
coming out.
Sorry for the
Yes.
YouTubers. I share here the evolution of insurance and Insurtech, the amazing infographic you created.
Thank you.
Yeah, it's like, wow, it's how much it took? Wow,
it took a while. It took a while, and it probably misses a couple of companies, but I think I try to give a good grasp of like the last 100 years and like the key kind of milestones and things that happened. So I think the reason why I did this, again, as I mentioned, I got into insurance from the Wild Wild West because I don't have insurance background. And I think after, certain time investing and, looking at insurance and Insurtech and, talking to founders, investors and whatnot, the ecosystem, I was thinking like, hey, like maybe it's good to, take a step back and, think about what has happened the last, 100 years, or let's look into the history of insurance and, what has happened over the last decade, like the last decades, and what kind of, key milestones, led to what kind of embarked the Insurtech journey. And, during that process, it was also kind of fascinating for myself to see all of these, you know, key milestones from companies or when companies were started. And, for example, when Geico hit their first million in policies, I took into account a lot of different sources that I kind of scraped through the internet and try to read a lot of things, mostly on the websites of these companies. And I think when you look at the history of insurance, and obviously insurance is one of the oldest, industries in the world. It didn't just start 100 years ago. But I thought focusing on the last 100 years is kind of a good timeline. And as you can see, like from this infographic, the incumbent that a lot of people know in the US specifically and are the State Farms and Geicos and Progressive that started in the 20s and 30s, the 1920s and 30s. And from there, a lot of laws were passed, a lot of, other companies were built. And it kind of in the 80s and 90s, we kind of saw a first wave of, digitization, I would say, right? With like the insurities, the select quotes, and the insurances and insurance, they kind of started with a kind of digital approach to insurance, because before that insurance was basically very regional, right? And then these big insurance companies started with like agents and independent agents, and then try to reach different states through various forms, but mostly was through mail, right? Or kind of like independent agents that were settling in other states. but the digitization kind of happened in the 80s and 90s, started there. And, from there, I think the kind of key, um, you know, step was, the Climate Corp in 2006. I think that's kind of, started kind of the wave of like, hey, there is a kind of a digital approach, which is kind of close to, the insurances and others that people know. But I think Climate Corp is interesting because there was kind of a first bigger exit that, kind of made a splash. Obviously, insurance also, was sold for a bigger amount, but that was later, more in 2011. But Climate Corp started 2006, and eventually was acquired by Monsanto for over $1 billion, and they were focused on weather derivatives and kind of like insurance 1.0 on the digital level, right? And that's where like the founder is David Friedberg. I think a lot of people kind of know him in the venture community, and he actually also started Metromile later on, which a lot of people are familiar with. But that's kind of I feel like that's kind of a bigger happening in the insurance world that a lot of people are aware of. And the whole gist with what he built was basically, the thesis was to sell weather derivatives online to small businesses with weather risk, and then eventually it transitioned into focusing fully on the agricultural side, and that's obviously where I think Climate Corp was interested. But I feel like that kind of set off the Insurtech revolution from my perspective, because then from there, if you look at the timeline, 2010, 11, 12, and so on, all of these new Insurtechs kind of emerged on the startup side. And I feel like that's where also like the VC industry felt like, well, there is like some good opportunities in terms of exits, right? $1 billion exits, there is some venture return possible. And that kind of set, the tone for Insurtech, like I think in the early 2010s, is from my perspective where things are started. And a lot of companies started focused in the Insurtech wave one here. When you look at the timeline, most of them were focused on the traditional lines of businesses, home auto renters, some small commercial, some new business models, but mostly trying to focus on digitizing whatever the consumer knows already, with the premise of like, hey, insurance is not a customer friendly business, and let's make it customer friendly, and acquire customers directly with a nice app on the background and direct claims handling and 24/7 customer support and so on and so forth. And then from there, I mean, the rest is kind of history, right? I mean, in the late 2021s and twos, like the first of those Insurtechs kind of went public very quickly with like a very high valuation, which, was very surprising for me specifically to see. But again, I was like, hey, the market is paying that, and, maybe it's right. But I feel like I think there was
why for you it was surprising? Because all the markets say, okay, we have a new kid in the block called Insurtech.
yeah.
And
So yeah, going back to like this, right? I mean, if you look at the history, and if you look at like the State Farms, Geico's, and whatever, these guys have been around for almost 100 years, right? And so when you look at their kind of market capitalization and their kind of premium to enterprise value, or whatever you want to call it, book value, and so on and so forth, it took Geico like, almost 30 years to reach 1 million policies. And
come again,
Progressive.
because the audience need to understand it.
Yeah.
Come again,
Repeat
the
it, you
time?
mean?
Yeah.
Yeah, it took Geico 30 years to reach 1 million in policies in force, right? And then almost 80 years, 80, to
Yeah,
surpass 17 million policies,
amazing.
covering over 28 million vehicles. And then Progressive and like Allstate, it took them almost 50 or 60 years to went public. Again, we're talking about a different timeline, right? And nobody says you should wait 20, 50, 60 years to go public, but the all of the newer insurtechs, it was less than 10 years that they
Mm-hmm.
went public. And the reason why I'm bringing this up is that I learned from my perspective, insurance is like a very, very, kind of get rich slowly business, meaning, growing at all cost will not get you to the right outcome, right? Because it's a risk selection process. You want to take on the good risk, you want to eliminate the bad risk, and obviously you want to build a portfolio. And I think looking at those numbers that I mentioned before, you can see it took a long time for these behemoths to get to where they are. And obviously, they started operating in a world where technology was not so given, whereas today, technology is obviously ubiquitous. But so for me, again, it was surprising because when you look at the market cap of these kind of companies, I don't know where Progressive or Allstate are right now. Let me see, Allstate stock market cap is $42 billion, right?
What to do?
And I think their premium book of businesses is somewhere around 40 billion or so. So it's basically one-time book, right? If you want to look at it that way.
Mm-hmm.
And so it was surprising to see that, these insurtechs were valued at like 20x, 30x book value going public, right? And I was like, that's kind of weird because even if you claim that you are built on the fully new technology stack. You are technology first. You are customer first. Like a 20, 30x on book value is just insane, right? And so, I mean, again, the public markets were kind of induced into that, and they successfully were able to go public. But I feel that quickly, changed where, public, where all the metrics and all the you know data that these
Mm-hmm.
insurtechs had were quickly coming to light, and those numbers could not hold in the public market. And that's why if you look at the market cap of these companies that went public, they are a fraction of what they were when they went public, right? I mean, Lemonade, I think went public at 7 billion. I think they're
Yeah.
trading now at 1. Hippo went public at 5 billion. I think they're trading at 500 million. I'm not sure. Let me see where it is
See
today.
here.
Uh, it's at 340 million market cap. So almost more than 10x down. And then Root went public at like 6 billion, I think. And they're trading their market cap is at 450. So as you can see, all of these kind of adjusted. The only one that is surprising and like it's kudos to them that they were able to figure it out is Oscar Health, right?
Mm.
Oscar Health, they're also like more on the healthcare side, obviously, but they went public. Let me see if I can find it.
Sure.
What was that again? When they went public, I think they went public at 6 or something. Uh, at 8, 7.8. And
7 point.
they were able, yeah, they're now at like 3.7, so almost half, which is not bad, right? I mean, it's still okay, right? It's not like fully, 10x
Exactly.
down or 20x down. But yeah, so going back, I think uh, yeah, that's kind of I don't know if we dived into different topics, but I don't know I forgot the question.
Yeah, I have a couple of questions regarding what you said right now, but let's. I want to ask you about LLMs. LLMs, AI, of course. How do you see the emergence of LLMs affecting the landscape of insurtech startups? Because we can see that there is a lot of startups that can vanish, or I can call them like the unicorn of today would be the popcorn of tomorrow, and they will pop up
Hmm.
because of the generative AI, because of the all the agents, not the insurance agent, but the AI agents that can replace more and more startups, and eventually even in insurance, because if it's call centers and documents, and we can keep on. How do you see the emergence of LLMs regarding to insurtechs?
Yeah, I think it's obviously AI is like the newest hype topic right now
Mm-hmm.
in the whole venture world. I think every 5 to 10 years we have like different topics. It was blockchain and
Blockchain, yeah.
crypto, then it was fintech like 10 years ago, then it was insurtech 7 years ago. Like it's like we have like always these cycles, I think, coming and going. And I mean, first of all, I just want to say AI or LLMs, whatever, this is nothing new, right? I mean, it has been
Right.
around for years. And I think what has changed though is, and I think that's where like this whole interest comes from my perspective, is that one application really found product market fit on the consumer side. And what I'm talking about is ChatGPT, right? So basically, the use of AI, LLM, and whatever you want to call it, kind of find a way into the mainstream consumer world without even, making it like basically actually making a big bang. And I mean, if you look at the revenue numbers and the growth of OpenAI, ChatGPT, it's just insane. And I think that's what kind of transformed this whole interest in AI and LLM models in general. Because again, I think that was something that was there before. Like people, like a lot of companies, startups, whatever, mature or new or nascent, were using some sort of AI capability or LLM technology for the underlying
Mm-hmm.
business. And so, going now to the insurance world, I think everybody's looking at that. Oh my God, like, yes, that's the newest thing. And we have to now get into AI and LLMs. And, this is the newest topic and trend in insurance as well. Where I'm like, wow, okay, cool, great. Like, I'm okay. I feel like there is so many different problems in the insurance world that are fundamental. And a lot of problems are very, maybe not trivial, but like, they look trivial, but if you can solve them, it's way more valuable than having an AI or LLM, whatever thing you're doing over there. So,
For example, what kind of problems do you think about?
so right now I'm looking a lot into the ENS market, right? The excess and surplus line market. I
Hmm.
mean, as trivial as it sounds, there is not much technology enabling ENS brokers and agents and carriers to sell, distribute, products. So building something very, simple by enabling agents and enabling carriers to, communicate and distribute product uh, would be great. And I think there's a lot of people building in and around that, right? But this is something that looks from the outside very trivial, but it's, harder to build. But it has literally not much to do with AI or LLM, right?
Of course, yeah.
Uh, so that's what I mean with like there's other problems that, you can solve, focus on. And when you look at, AI and whatever you want to define that, LLMs, I think that there is definitely, a place for that in the insurance world as well. Um, I think mostly probably on the claim side, right? Where people already have been, building in and around that as well. And there is a lot of topics around now, using AI LLM chatbots to enable customers so
Mm-hmm.
that
Right.
basically you have kind of a conversational approach to policy sales. And then there is a lot of discussions around using AI and LLM for kind of educating customers or navigating through the maze of insurance. helping them to understand what kind of insurance they have. And all of these things are great, right? And all of these things, will make a difference or have an impact. But I feel like, and then obviously like the whole discussion around AI and LLM on the underwriting side. But again, that's also one thing to keep in mind. From my perspective, there's also the discussion who will win the AI race or LLM race or whatever you want to call it. And is it going to be a startup or is it going to be like the big incumbents like the NVIDIAs,
Mm,
Googles, Facebooks, and whatever? And I think the reason why, people think about that or I think about it is because similar to insurance companies, they sit on a shit ton of data, right?
right.
That they can use for any sorts of like models. So when you think about on the insurance side, again, it's the incumbents who, from my perspective, have tons of data and can use that data to train those models and make something out of it, either be it on the customer servicing side, on the claims side, or underwriting side.
Good perspective. Let's go back to Insurtech 2.0 because
Mm-hmm.
you mentioned about the ENS, and yesterday I had a talk with a broker from Boston, and that is specialized in captive insurance. And the ENS market, for me, could be very relevant to Insurtech 2.0 in a way of the specialty that you need to have in insurance and to create something very uh, formal or it's not just to create a policy to personal lines for car insurance, homeowner insurance. It's more complicated. And I think once we look to Insurtech 2.0 in this kind of way of get specialized insurance people, professionals, combined with the high tech right now that we have, and then we can create ENS product and even a much more complex products. What your thoughts
Yeah.
about it?
Yeah. So the second article that I wrote, as you're referring to, is like we try to, go into the next step of like what's the next wave of insurtech look like based on, when you look at the history of insurance and the
Mm-hmm.
first wave of insurtech. And kind of like the lessons learned from the first wave and what went right, what went wrong, and what can the next set of entrepreneurs and startups um, use as stepping stones to be better in what they're doing for the next wave of insurtech. And I defined it into kind of three different categories from my perspective. Obviously, they're broad, but one is obviously the embedded side, which again is also nothing new, but I feel like now with the learnings from InsurTech Wave 1 and the emergence of like AI and other kind of models and technology, embedded insurance can take off even more. And then the second part is what you mentioned is the emergence of specialty insurance, where I feel like there is the biggest needs in terms of innovation and technology. Because again, if you look at insurance, right, and if you look at the traditional lines of like home, auto, and renters, I
Mm-hmm.
always like to, mention those. Those are very, saturated, commoditized markets,
Right.
meaning if you have car insurance from Geico, State Farm, or Allstate, the product is the same,
It's the
right?
same,
Sure,
right?
someone might have a better app or they might give you some other free gimmick or something, but at the end of the day, like it's the same product. So a lot of insurtechs wave one try to, basically point out like, no, there's a flaw. Like this product is shit, so we have to build a new product, which is fine, right? You can always build better and newer
Right.
products in and around insurance. But the question comes back to like, does it make sense to build it in a very commoditized and crowded and competitive market, which is just price driven and which is completely saturated? Because as much as you think, or as much as people think, I feel the incumbents had a good enough product, right? The product was fine. Like there's not much you could have changed. I feel like what Insurtech Wave One showed is that, you can better service or get customers or, help customers to understand insurance. So, and then when you now think about specialty insurance, that's where I feel like, hey, yeah, the technology and innovation is needed there because when you look at specialty insurance, most of the products on the specialty side are still very cumbersome, very operationally heavy, meaning there's people still looking at rating tables. You still have to fill out PDFs. You still have to wait. There's limited, technological improvement or approach to distribution, digitization, and servicing customers. So there is a lot of opportunity building in and around those lines of business. However, you have to keep in mind that most of these lines of businesses are not as big as those traditional lines, right? So, as an example that I mentioned in my article, medical malpractice is like a 12 to $15 billion insurance market, I think, in the US every year, which is a fraction of when you look at the home insurance market in the US, which is 100 billion, right? However, I feel, if you are able to build something in that in that category, you can basically take a lot of market share um, because like there's not much. It's a very fragmented market. There's not much technological innovation, and so you can really make a difference there. I invested, for example, in Covertree, right? Covertree focuses on home insurance for the manufactured home category, right?
Okay.
It's basically middle America here in the US, like over 25 million people live in manufactured home. Manufactured homes are basically manufactured in the facility and then transported to a site and installed, right?
Hmm. Okay.
Whereas, traditional home, there's like a field and someone goes and
Right.
builds a home. And interestingly enough, getting insurance for that is not as easy as you think because you can't go online and find an online tool to fill it out. Even the bigger uh, insurance companies like the Progressives and Geico's, they always refer you to an independent agent. So you have to fill out a paper form. You have to like send the paper. It's ridiculous, right?
Wow.
So and that market also in general per year is like around $10 billion. And there's two companies who are kind of dominating the market. One is American Modern and the other one is Foremost. And so, but no one has really built like a digital
Hmm.
insurance product. And so Covertree has actually built the first digital insurance product, an end-to-end digital insurance product where you don't have to fill out a paper form anymore. They basically enable independent agents and other kind of channels to directly write manufactured home insurance within like minutes and sell this to the end consumer. And
And
here again, go ahead.
no, 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 go ahead.
And here again, I mean, if Covertree is able to get like 5% of that market or 10%, that's amazing, right? And they
Exactly.
have no competition on the digital side, at least, right? Sure. And so that's where I feel like you can make a difference in insurance. And at the same
Hmm.
time, also help incumbents because like incumbents eventually, and I think there's already aware of them, will see and be like, hey, wow, they have like this cool, slick digital product built on a complete like tech stack. Like, let's buy them so we can dominate the market ourselves, right? And so yeah, that's how I look at it.
You said about embedded insurance, you talked about embedded insurance, and you will moderate a panel about embedded insurance at
Hmm.
the upcoming event in Insurtech Insight Europe 2024 in London next month.
That's right.
Yeah, we're at 29. So yeah, next month. What is your perspective in more detail about embedded insurance? And do you see it really, truly radical force that happen in the industry?
Yeah. Um, again, I think embedded insurance is nothing new, right? So that's something to keep in mind.
Exactly.
Has been around.
I will tell you my perspective from embedded
Sure.
insurance is very relevant, and you need to have that kind of tool in our industry. But it seems like there is nothing happened. Like you don't have like the big band of what you expect in with embedded insurance. I don't compare it to generative AI, of course, but once all the Insurtech 1.0 get out and then create a great UX UI, and all of the people was amazed, and except you that no, but with
No,
embedded
I was amazed.
insurance.
Don't get me wrong. I was amazed, but it was not like
I
rocket
kidding,
science.
I
Yeah.
know. Exactly. And embedded insurance is like, okay, nice to have, like let's do a regular partnership, we don't have anything new here, and but in the other side is like we have something very unique here, and we can create a really disruptions. I don't like this word, but I have we have ability to make a really disruption with embedded insurance to give insurance to the people. This is my question. So yeah,
Yeah.
go ahead.
No, I agree. I think again, embedded insurance is nothing new.
Mm-hmm.
When you think about it, it's kind of when you think about affinity sales, that's kind of embedded insurance from the history perspective, or bank assurance. Is kind of embedded
Mm-hmm.
insurance and has been around for a long time. I think now, as I mentioned, embedded insurance is interesting to look at because with all the technological innovation that has happened over the last 10, 20 years, that I think there's a new way to look at that. However, and specifically in those traditional lines of businesses, right? Home, auto, renter, how can you embed those products into different kind of flows? Be it like when you buy a car, when you buy a home, when you go and rent a home and you can just sign somewhere and it's automatically included. So these kind of things, I feel like people tried and people are still trying. But as you said, I don't think that has like the market has fully embraced that yet, right? That's one thing. And I think on the other hand, embedded insurance now, given the technological innovation, has also a chance to, help with the protection gap that is out there in the world. Meaning, there's a huge amount of people who want insurance or can buy insurance, but actually can't get it in the right way. And that's mostly happening in the developing markets like Latin America and Africa. However, there's also a huge protection gap still here in the US, which is caused by natural catastrophes. And how can you use embedded insurance there? And I feel like from my perspective, there's a couple of things you have to keep in mind, right? One is from the embedded perspective, what are kind of the value chain dynamics here, right? Meaning like who are the primary beneficiaries in the value chain? Is it the distributor? Is it the incumbent? Is it the embedded participant? I feel like that's kind of still unknown. There's a lot of regulatory scrutiny around embedded because the current products that are in the market that were built not for embedded insurance, right? So
Mm-hmm.
that's something. And then most importantly, I feel like will there be or are there any monopolistic trends? Meaning, when you think about embedded insurance, you always have to embed in some sort of a platform, right? Or some
Right,
sort of another, whatever you want to call it.
right.
And is there any monopolistic trends there? Because when you think about Apple, for example, I think I mentioned it in my article, which I think is amazing to see. Apple has an embedded insurance product, embedded warranty, right? That they sell.
Apple Care,
Apple Care.
right.
They make over $8 billion, right, on
Wow.
on this product,
Wow.
which is insane, right?
Wow.
So it's crazy. 8.5 billion revenue. And these guys, there's no way that you will get into that value chain, right? They dominate it, and I think the way they are winning there, and that's the key thing for embedded insurance from my perspective, is that it is so seamless and it is so customer centric that you don't even think about it,
Mm-hmm.
right? So when you go buy an iPhone now and they tell you like Apple Care is included in the price, you can opt out if you want, but
But you will
it's
not do
already
that.
included. It's like whatever, 299. You'll be like, it's fine. I'll take it, right? Whereas, and I think that's why they're winning, because it's just so seamless and it's part of their experience, and that's why they're able to make this happen. And I think that's the key for embedded insurance. And
So,
how will this work in the future?
so how you see, I remember there is a like a partnership between Amazon and Next Insurance. I don't know if it's
Hmm.
still going. Um,
I'm not sure.
uh, yeah, I'm also not sure, but this one example for what I wanted to ask you, because once I buy Apple Care, I don't know who insured me. I don't know if the insurance company or if it's on Apple. It's Apple. I buy that
That's
because
right.
it's Apple. And right now, if I combine it, insurance company or startups, no matter what, I combine it with a different partnership. But then I see, okay, this is from X, no X like Twitter, but from X like from X insurance company. Okay, I don't really rely on, or this is something could be very harmful for the process. You know what I mean?
Yes. And
So
that's actually a very good point that you mentioned, because as I said, like all these platforms are looking for best experience, because as you said, when you go to Apple, you don't think about who is the warranty provider, you think it's Apple, and that's the experience that you get. Right.
exactly,
And it happened to me actually, because my screen was broken. So the way it works, right? You just make an appointment in the Apple, app.
mm-hmm.
Then you go there, you drop it off, you wait for 30 minutes, and they give you this phone back. And this is amazing, and you don't have to worry about anything. That's it. No worries. That's it, right? And I think that's what as you mentioned, the experience is so important, because the customer doesn't want to wait, and the customer has the highest priority for these platforms. And so, how can you enable and have this, meaningful experience for them? Because a lot of embedded insurance to date, I think the problems were that platforms integrated the embedded insurance provider, and if there's something happened, the customer had to go to their platform to file a claim and had to wait and whatever.
Exactly.
So all of these things are kind of they break the flow and make the customer unsatisfied, and no platform wants that.
Mm-hmm.
And again, that goes back to what I said before. Will there be any monopolistic trends? Because
Exactly.
there's just one winner that can make it happen. But it seems like, I mean, there's two kind of bigger players out there that are thriving. One is Bolt Tech, and the other one is Cover Genius, right? And so both of them seem to be doing well,
Mm-hmm.
and we'll have to see how that plays out.
You said earlier that insurance is get rich slowly, um, and especially in right now in the fundraising statute that and all the insurtech, all the fintech right now very struggle fundraising, very struggle to
Hmm.
evolve, if we can say that. How can insurtech startups strike the right balance between achieving steady growth, and avoiding the pitfalls of expanding too quickly? Because, uh, yeah, go ahead.
Yeah, I think that's a discussion that we can have probably for hours. And this is one of the major topics that I have with my own founders all the time, of like, hey, what should we focus on? And is it growth? Is it profitability? Is it slow growth? Whatever. The way I kind of, when I was just talking to my founder early on, before our call, the way I try to explain it to them is that yes, you need growth. You have to show something. You have to show that there is growth, right? But it's a chicken and egg problem, because if
Right.
you show growth of like, hey, I sold 10 policies this month, and then 12 policies the next month, and then 15, that growth might be too slow, right? So you have to find a balance of what is the right approach there. And then second, I think the most important now in terms of insurtechs that are selling insurance and not selling to insurance companies. That's a different topic there. Um, they need to show that they have a better understanding of risk selection, or a
Mhm.
better, underwriting tool that, helps them to better evaluate risk. So these two things come together, and it's very hard to do, right? It's very, very hard to show both, because most of the time, even if you're great in risk selection, losses show up way later than like,
Exactly.
the next month. If losses show up already in the next 2 months, well, it means like you're really bad, or you didn't took the right risk there, or whatever. But usually in those traditional lines, and other lines of businesses, the losses are more later on. And I feel like at the end of the day, you have to show an insurtech, from my perspective as an investor, you are focusing on a category or a sector within insurance that has the need for technology, right? Meaning like, hey, incumbents are using still traditional tools. There's no digital product out
Mhm.
there. That's kind of the first kind of given, right? And then you have to show like, hey, there is a chance of getting market share. So meaning like it's not a fully commoditized market. It's only price driven, because that's going to be hard to win there. And then third, you have to show a way how you're going to acquire customers the right way, and in a profitable way, over the long time, over the long run, right? So I think these are the three things that I would say are important.
Interesting. You also said about developing markets.
Mm-hmm.
What kind of opportunities you see in developing markets, such as Latin, Africa, Middle East, even maybe the Far East, like India, that we can see a lot of startups started to raise there.
Yeah,
So what kind of
you,
opportunities we see?
yeah, you get a first, your viewers, and you get a first insight into what I think, because that's actually part three of the series that
Nice.
I
Okay.
just kind of I'm finishing up to write, and I should probably publish within the next couple of weeks. I'm still,
Nice.
tweaking it a little bit. And so, yeah, so the next part and three, I talk about like insurtech and the opportunities in emerging markets, specifically Latam, Africa, and Middle East.
Hmm.
And you know, just to highlight, I think Latam, I feel like, is one of the biggest opportunities in the next 10 years. There is so much happening there. There is so much opportunity in terms of insurance that, we'll see a lot of good things happening there. LATAM is one of the, fastest growing regions. The market size for insurance is 170 billion premium a year, which is amazing. The CAGR is like 11%. Is one of the most profitable markets for insurance globally, which is amazing,
Wow.
right? And there is a lot of, digital penetration, which is important when you think about insurance and insurtech. So
Of
almost
course.
83% of the population are using the internet, which is amazing, right? So in terms of opportunities there, I think I made an investment there into a company that is focused on life insurance. And life insurance, I think, is a key enabler within the Latin American region, because,
Mhm.
you know, the, the middle the middle class in Latin America is growing steadily, and meaning like a lot of people in Latin America are, financially stable, financially savvy, financially educated enough, because they have, um, either lived abroad or, have studied abroad. So they see that there's opportunities for financial stability, and they want the same thing within the Latin American region. And life insurance is a great enabler of that, right? When you think about penetration of life insurance right now in Latin America, is approximately 0.5 to 1.5%, right? Which is nothing. In the US, I have to go back to the numbers. Sorry, it's 15% of Latin American adults who can afford life insurance have them, whereas in the US it's 52%. So there's a huge, opportunity there. And I made an investment in a company that, is a full stack life insurance carrier that sells a new digital insurance product that nobody has built before, right, in the Latin American region. That's that for that. And then Africa, amazing continent. I mean, when you look at like stats over there and the stuff, it's like the most underserved insurance market in the world, first of all. But it's also inherent complex when you think about, all the problems there. Insurance penetration is like sub 3%. So meaning like 90-70% of the people don't have any insurance. You deal with a lot of like, structural issues there as well, right? Mostly it's kind of lack of awareness, regulatory inconsistencies among countries, and then fragmented distribution models that are very hard. And at the same time, cultural habits. That's a key thing when you look at emerging markets. Cultural habits are just so different, right? Specifically in an African region. But there, in terms of Insurtech, microinsurance has been thriving in the African ecosystem for some time now, and Insurtechs have built in and around that. So I've written about that in my article. And then lastly, I think Middle East, is the region with the lowest insurance penetration when you think about it in terms of insurance. However, also a lot of different challenges come there with like fragmented market structures, lack of awareness, and then there specifically cultural and religious beliefs, because obviously the majority of the populations are Muslims, and when you are someone who is Muslim and believes in that, the traditional insurance, doesn't apply to your beliefs, meaning there is a different kind of insurance that was built, which is called takaful as a solution, influenced by cultural factors. Because as you and I know, in a conventional insurance mechanism involves elements of like investing in, you basically transfer a risk to an insurance company, and in a conventional insurance mechanism involves elements that are prohibited by the Islamic rules and principles, right?
Because they like gambling, and it's prohibited in Islam, right?
Correct. So that's why traditional insurance is hard, and a lot of things are like focused on like different.
As a former chief underwriter, I had a case that we had to insure a business, and the insured was a Muslim, and he wanted to cover only liabilities, third-party liabilities, employers' liabilities. And then we asked him, okay, what about your property? And you have a lot of property. And he said, no, the property is from Allah will save us, and that's it. And you understand is from his beliefs. It's not just, okay, want only the liabilities, but from a cultural perspective, from a religious perspective.
Yes.
It was very interesting, yeah. I wanted to ask you about 2025, okay? During your experience, what are your top 3 predictions to 2025 regarding Insurtech? Of course.
Yeah, good question. I think we'll see a lot more movement on the specialty insurance side, right? So Insurtech's, focusing there, specifically here in the US. I think we'll see a lot of, development, as you mentioned, on the AI and LLM side. I just don't know if, you know, big things will come out of that, to be honest. Um, and then I think emerging markets is another topic, as we talked about, specifically LATAM. I think there's huge
Mhm.
opportunity that, we'll see more coming out within the next 2 years.
You said about Latin that you invested right now in Insurtech in full stack Insurtech,
Hmm.
and full stack is like insurance carrier, is end-to-end insurance carrier, right? We
Correct.
know that Lemonade Root, I think, was created as a full stack. And right now there is like a scene in the insurtech world that you don't want to become full stack. This is not very smart move, and even not to be an MGA in the beginning. What is perspective about this? Because right now, if I'm in insurtech, I probably want to be one of those TPAs, MGA, MGU, full stack if I have the money. I want to
Yeah.
be like one of the creatures, but
Yeah. Full stack. Um, just have to write this here. Full stack only makes sense if you have kind of specific data that you can use and be better, right? Starting off as a full stack will not give you, a better advantage. Actually, you really need to know what you're doing, right? So that's one thing. MGA, I still feel like it's a great opportunity to get the business, but it only makes sense if you have if you focus on a specific category, as we talked about, where technology makes sense. Um, I am, the full stack I invested in, that there was a lot of like, historical data that they had amassed over 10, 20 years, over
Mhm.
decades that they used for underwriting. So they had an advantage there,
Wow.
and full stack make the most sense, right? And I mean, if you look at Root and Lemonade, I don't know what kind of data that they had that was better. I think it was just the timing there, felt better for them to start as a full
Mhm.
stack because obviously it gives you way more authority.
So as we need to the end, last questions. Are there any final thoughts you would like to share with us?
No, I think I really enjoyed it. Thanks for having me. I think we talked about a lot of good stuff,
Yeah, yeah,
and I hope the viewers will like it. And feel free to reach out anybody. Always happy to chat about insurance, and if there's any company building in and around insurance, happy to hear about it as well.
great. Amir, thank you very much. Thank you very, very much.
Thanks
Bye-bye.
so much for having me. Appreciate
Thank
it.
you.